Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 9th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I layer on top of it some option strategies that I find based on that economic and geopolitical environment and how that impacts the overall markets. So what I'm here to do is actually teach you guys how to implement options into your portfolio to increase that overall yield. It's really the only way to do that. But also keep in mind that we are an educational company, and past performance of any trading system or methodology is not necessarily indicative of future results. All right, with all that out of the way, let's get on with the economic data. Not a whole lot to see here, but one thing to note, we have a FOMC two-day meeting going on right now. It's going to not probably affect the markets today as much as tomorrow. We'll be looking out for that release. I don't think they're going to move interest rates, but it will be very key to see what Powell says at the end of all of that. All right, so we got the NFIB, which is the National Federation of Independent Small Businesses Index, coming in at 94.4. That's better than expected at 92.1. Are they optimistic because of all the stimulus that they've been getting and the PPP funds that they've gotten to help sustain some of that business while we're seeing this slowdown through coronavirus and the riots and protests and things of that nature? Quite possibly. All right, wholesale inventory, and it could be because the wholesale inventory is coming in at 0.3, expected to be 0.4, so they are moving inventories throughout all of this. We did get JOLTS jobs opening, but that's like 2 months in arrears, and really at this point it is nothing to really look at. We did get the IBD tip consumer confidence, and that is basically a survey from the Investors Business Daily. That was expected to come in 52. Anything above 50 is expansion. Well, it came in at 47. So the consumer not really super thrilled about the economic situation right now, probably because a lot of those people answering that survey are unemployed. Despite the fact that they might be getting unemployment insurance, they probably know that some of that extra stimulus that they were receiving is about to go by the wayside. All right, let's get on with the overall markets. We've got crude oil coming off just slightly. We could call it unchanged for the most part. Never got into that 41 handle. We did test 40 yesterday, broke above it just for a brief moment, but started seeing some weakness. I think that we're going to see that gap covered. We're staying above the 9-day moving average continuously. It's been a long haul, but we are eyeballing that $41 mark. That would cover this gap that we're seeing right here. Low is 41.05 before we gapped out there, or gapped down. All right, gold is moving higher because this morning we were seeing a lot of weakness in the equities, a bit of a move back as the day winds on, but we are seeing bonds react as well. Yesterday was probably the day to get in there and sell that TLT. If you guys remember, I got into selling some short puts in TLT, pulled the ripcord on it right before the bottom fell out here. And I decided, or I said I was going to look to add some more short puts in there because I believe that it should be at least above 176 here in the bonds. We are well below that at this point, but I do believe that it's going to start creeping back higher. I don't think that interest rates are going anywhere anytime soon. As the economy is opening up, we're starting to see more spikes in coronavirus, so that could start to wane on businesses going forward as well. So I think that bonds are a little overdone to the downside, but I think I might have missed my great opportunity in there right now. Still keeping an eye on it. If we get a bit of a pullback, I'll probably look to do that. VIX moving higher because what did I say? We were seeing some weakness in the equities. As we can see here in the Dow Jones Industrial Average, off by about 238 points, 240 points. Came back down. I thought we were going to come back down and hit this value area, the point of control, I should say. But we have started getting some strength coming back into the market here. One thing to note that there is a lot, the shorts don't seem to be really in full effect right now. I think right now their heads are spinning as bears are trying to really wonder if they really underestimated the strength of the economy going forward, while at the same time, people that got into this at these lows, like me or you, if you guys were listening to these daily market commentaries when I was talking about it being just way overdone to the downside, we're starting to wonder whether or not we need to start covering some of our positions. The trend is your friend, though, so I'm trying to stay with that as well, with my overall portfolio very delta long at this point. NASDAQ making another new all-time high. It looks like 10,000 in the NASDAQ is almost a sure thing here. As you can see, it is leading the way to the upside. Market just blowing the top of it. Most of this is being done by the FANGs, which is Facebook, Amazon, Google, Netflix, and I can't remember the other one right now. I'm drawing a blank there, but they are really accounting for most of this move, as we're seeing Amazon make another all-time high. I think Facebook made an all-time high as well. So the NASDAQ is really being driven by those 5 stocks. All right, we got the E-mini S&Ps just slightly off on the day by about 23 points, but having said that, it is giving up almost all of yesterday's gain. It came up and tested that value area high. That's where we start to see it lose momentum, generally speaking, because that's where people like myself are starting to wonder if this is the time to start covering, when most of this time and volume has been spent down there at around 3,000. So with that being said, I did add some negative delta with my portfolio in regards to the SPY. Did a very small, but I needed to add a little bit of protection, as I want to make sure that I am staying mechanical with all of this. All right, we can see overnight inventory did get very long, or not very long, was getting longer, but then coming into the day, we got a bit of a slam down as we started hearing about some coronaviruses starting to spike. I think is really the catalyst to all of that. Now today in the day session, a bit of a slow one going on. All right, so let's talk about the trades that I've done. Pfizer, I just took a flyer on this. Again, doing this very small, but decided to go in to the September and bought the 38 calls in there for $1.22. Now, that being said, I'm looking for it to maybe go up and test that value area high. Pfizer's very into this whole realm of trying to combat COVID-19. So, they've been lagging for the most part. I think it's an opportunity for them to pop. I don't normally like to do it necessarily around the point of control, but I think that we might get a move back up to this 38 volume area, and that is right where my strike location is. If we get there, then it will follow along with my rules on covering that trade. I'll be about 50% increase in the value of my position there if we get that little bit of a pop. It's trying to get above the 50-day moving average. We're seeing the 50 start to cross over the 200-day moving average, which is a bullish a bullish crossover, and that is a longer term trend when that happens, that it is bullish. So everything's kind of lining up right there. As we can see, we've got the 9-day moving average, we've got the 9-day simple moving average right here in the blue, and then we've got the red is the 50-day simple moving average. All right, and then in the orange we have the 200-day moving average. All right, so all of those are coming to a point right at the point of control. But what I want to talk about is when you see the 50-day simple moving average start to rally like that, and we've got the 200-day moving across a line there, that is long-term bullish trend. And that being said, I'm only really looking for us to get up to this 38 mark right here. All right, so that's where my strike location is. That's where I got into my long calls, bought the 38 calls in September. All right, so not a massive move, is not necessarily what I'm looking for. We could get a pop up there and test that value area high. That would be a great thing. But all of that being said, this crossover is kind of getting me to believe that we're getting ready to see a little bit of a pop in Pfizer and try and cover this little line in the sand where we've got a bit of a gap there as well. So playing Pfizer to the upside with those long calls. Like I said, I did it very small. That was just on something when I was flipping through the charts this morning, going through my daily routine. That one kind of popped up into my radar as we were seeing that happen. Now, IBM, you guys remember, if you guys watched last Thursday when we were doing the webinar on the long calls, I've been talking about IBM for weeks now, talking about the cloud services. They're going to do very well in this type of environment with people working from home. And I've been waiting, sitting on my hands and probably lulling myself to sleep watching this market continue to move higher. But I decided to throw in some long deltas with IBM. I went a little bit shorter on this because I'm only going to play this for a next 5 days is what I'm looking at for this. If it doesn't start making that move in the next 5 days or so, I'm just going to have a time stop, pull the ripcord on this. So I went into the August, bought the 140 calls in there for $3.40 in there. So if it doesn't start making a nice move higher here relatively shortly, I'm looking for it to go up there and test this 143 mark right here. So this is where I'm looking for the market to go. You know, when I was looking at it before, it was kind of the 135 strike there, and I missed that opportunity. But I'm still thinking positive about IBM, and I want to make sure I can take advantage of any upside move in this stock as well. So added those. So what happens? Boeing, they've made a nice move. We were talking about travel and leisure. Finally started getting a move. Buffett puked all of his airline stocks on those lows. And then we started seeing a lot of people coming in with these newer accounts. They're basically saying more millennials are coming in here and buying these travel and leisure because they feel that they are valued going, long-term forward. Well, I have to say with Boeing, there was another article coming out. 600, they've already lost 600 orders for airplanes this year. And last month, I think it was close to 70. It was like 68 or something like that. So they are negative on their sales for airplanes. That is not good. Therefore, I decided to go in there and sell some calls against my theory that it is overdone. And with the volatility as high as it is, I think I can take advantage of that because I have great strike location, you guys. In the July, I sold the 325 calls in there for $3.65. So those 325 calls, we are talking up here, and we are also talking pre-corona. Now, they were already getting beat up heading into the year because of the 730 MAX, which still is an issue, all right? The only people that are buying airplanes right now are FedEx and UPS. Everybody else is cutting orders because of the lack of demand for travel and leisure in the aerospace, all right? Basically, we're looking at these airlines only getting about 50% capacity. At that point, they aren't making money, you guys. They don't have the money to spend on a new airplane. I think that they're going to continue to see more and more airplane orders canceled. All right, there's no way that UPS and FedEx can make up for that deficit there. So I think that I think that Boeing is overdone to the upside. Looking to get out of this one for 50% of max profit. My strike location is just phenomenal. I think that, I've got almost $100 leeway here, right? A little better than $100 leeway in this particular underlying. So sorry about that. I was talking about with my portfolio, I am looking to add more short deltas, and also I went into the SPLI and small added some 300 puts. I went into the August, bought the 300 puts in there for $7.64. Now, like I said, very small, not going to be a massive delta adjustment, but it is really ultimately about putting on a little bit more protection. As you can see, the 300 calls, that I did in the August. So I did the August 300 calls. Sorry, short the August 300 calls in there because if it comes back down, what did I did not say that. I bought the August 300 puts in there, sorry, to add a little bit of protection, paid $7.64 for it, expecting the market to come back down to around the point of control if that happens. Again, this is just adding some protection, adding some negative deltas in my portfolio if we start seeing a rollover. I'd be happy to lose that money on this trade if the market continues to move higher. It's not a full-on protection of the portfolio at this point. It's just in case something crazy starts to happen. So want to stay mechanical with my portfolio, and that's how we do it. All right, so that's all I got for you guys. Check out the webinar this week. It is on the roadmap to option strategies. We're going to be talking about how to implement a long call. Now, it seems very easy. You can go online, figure that out, but I have specific rules and guidelines and the roadmap for you guys to implement these into your portfolio by strike locations and how much we should be paying for a strategy like that. All right, so that's all I got for you, other than if you can't take that, take it easy. Please take a moment to go over this disclaimer, though. Bye for now.